Hi everyone, I'm Carl. Welcome back to the Renko Trading channel. Before we start, this content is for educational and experimental purposes only. It is not financial advice. Always do your own research before making any investment decisions. Today we're covering the top 5 mistakes beginners make with Renko charts, and how you can avoid them. These mistakes are super common, but they can also cost you real money and confidence. Stick around until the end, and you'll get a simple checklist to keep your Renko trading on track. One of the biggest mistakes beginners make is using the wrong brick size, and the impact can be huge. Take this 5-year daily Renko chart of Google from 2020 to 2025, using a brick size of 5. At first, the smaller bricks make it look clear where to draw trend lines. We'd likely sell when the uptrend breaks, buy again when the downtrend breaks, and then sell once more when the next uptrend fails. But here's the catch: towards the end, after a reversal, there's no clear re-entry signal. And while we're sitting out, Google pushes to new record highs, leaving us behind. Now look at what happens when we increase the brick size to 10. Suddenly, the chart shows one long uptrend from 2020 all the way through today. No in and out decisions, no missed entries, just a simple buy and hold model that captures the entire run, including the recent all-time highs. This highlights an important point: brick size also ties back to your personal trading style and risk tolerance. If you want quick, frequent trades and lower risk exposure, smaller bricks will give you more signals, but you may chop yourself out of the bigger move. If you're comfortable sitting through ups and downs, larger bricks smooth out the noise and often lead to larger overall gains. So while there's no single perfect brick size, the key is testing both smaller and larger settings and finding the balance that fits your goals and your temperament. Another common mistake is ignoring the bigger trend. Here's a target 30-minute Renko chart using ATR 14 brick size. On August 21st, it looks like a classic W double bottom pattern is forming. If you only focus here, you might think the breakout above the neckline around $99 is a strong buy signal. But now let's step back and check the daily Renko chart. On that same date, August 21st, it's actually just part of a continuation of the downtrend that began on July 23rd. In other words, what looked like a bullish reversal on the short time frame was actually just a pause in a bigger downtrend. This is why it's dangerous to trade only on smaller time frames. They can trick you into seeing reversals that don't exist in the broader context, and that can cost you real money. The key lesson: always check the higher time frame before taking trades. A signal that looks strong on a 30-minute chart may completely vanish when you zoom out. A big mistake beginners make is reacting to every brick flip on a Renko chart. Here's Apple's 3-year daily Renko chart with an ATR 14 brick size of about $4.52 per brick. If you look closely, there are multiple occasions where a single red brick appears, but the downtrend doesn't continue. Almost immediately, green bricks take over again and the price keeps climbing. If you sold on every one of those flips, you'd be jumping in and out, and losing money each time the trend resumed upward. Some traders try to fix this by using a 2-brick rule, meaning they wait for 2 consecutive color changes before switching direction. But even here, you can see several examples where 2 red bricks form, only to be followed by another strong rally. That still leads to getting shaken out and missing the real move. The key lesson: don't rely solely on brick color changes to trade. Instead, step back and look at the bigger trend. Renko is powerful, but it works best when you combine it with context, not when you chase every flip. Another mistake beginners make is cluttering Renko charts with too many indicators. Here's a 3-year daily Renko chart of Taiwan Semiconductor ADR, using ATR 14 with a brick size of about $5.84. On this chart, I've added just one indicator, the supertrend indicator, set with a period of 10 and a multiplier of 4. What that means is the supertrend uses a 10-period average of volatility, and the multiplier of 4 makes the bands wider, so it avoids whipsaws and only signals when a real trend develops. And look how clean the signals are. First, it gave a buy signal around $25, and we held all the way to about $107 before a sell signal. Next, we bought again around $90, and then sold at about $158. Another buy at $178, sell around $188. Then one more buy at $170, which would still be holding today as the stock trades around $262. That's just one indicator giving clear guidance without constant in and out noise. The lesson here is simple: Renko already strips away a lot of noise. You don't need 4 or 5 indicators fighting for your attention. One reliable tool, like Supertrend, combined with the trend itself, is often enough to keep your trading both simple and effective. The last mistake is chasing reversals. Here's a 3-year daily Renko chart of Meta, using ATR 14 with a brick size of about $15.94. Let's say our entry point was around $150. As the price climbed to $300, it's easy to think, it's already doubled, maybe this is the top. If you sold there and then saw a red brick, you'd likely get shaken out. But look what happened, the trend continued, all the way up to around $525. Later, you might see 5 red bricks in a row and assume the real top is finally here. But after a correction, Meta pushed even higher, reaching almost $730 before its next major correction. If you kept projecting tops and chasing every reversal, you'd be forced to sell early and then buy back at higher and higher levels, a recipe for frustration and smaller profits. But if you had simply followed the uptrend line, you could have ridden the move from $150 to somewhere in the $650 to $700 range before a natural exit. And that kind of trend capture is where Renko really shines. The lesson: don't try to call the exact top. Reversals are tempting, but trends often last longer than you think. Ride the trend, not every flip. So here's the quick recap. Number 1. Choose the right brick size. 2. Respect the bigger trend. 3. Don't overtrade every flip. 4. Keep indicators simple. And 5. Stop chasing reversals. Avoid these 5 mistakes and you'll trade Renko charts with way more clarity and confidence. If you found this helpful, hit subscribe for more Renko trading strategies. And check out my blog at lacois.com for free tools and guides. That's a wrap on today's breakdown. Thanks so much for watching. If you found this helpful, give it a like and hit subscribe for more Renko trading insights. Don't forget the bell icon, and I'll see you in the next one.